When it comes to our church contribution, the source of those funds ought to look differently as we age. Otherwise, we're probably paying more in taxes than we need to be. Welcome back to another episode of A Worthwhile Retirement. Glad you could make it. To preface this episode, as Christians, we are stewards of God's money, and so it is more useful in our hands than, say, the U.S. government. So while we must pay our taxes, we should be proactive to make sure that we are not leaving a tip. Which brings us to our topic today. You may have heard the acronym QCD, which stands for Qualified Charitable Distribution. A QCD is a distribution that you can make out of your IRA directly into a charitable organization when you are at least 70 and a half years old. And this distribution is never included in your AGI, or adjusted gross income. Historically, the limit on the QCD has been $100,000 per individual. But after the Secure 2.0 bill passed a couple years ago, this number is now indexed to inflation. For 2024, the QCD limit is $105,000. So, rather than taking a typical distribution out of your IRA in your name, a QCD is when you take that distribution in the name of the organization, allowing you to avoid including it in your AGI. But Jacob, what's the big deal whether or not a charitable distribution is included in my AGI or not? If I'm just going to give it away later, won't it still be deductible anyway? Well, great question. Let's imagine a couple in their 70s takes an ordinary distribution out of their IRA. Maybe it's their RMD. And their intention is to give that money to church, spreading it out every Sunday morning and putting it in the collection plate. Well, problem number one. The distribution now gets included in their AGI, and when it comes to determining how much of your Social Security benefits are taxable, guess which income is used in the calculation? Your AGI. I will put a link to the formula in the video description that calculates your Social Security taxes. Just know that your AGI can increase how much of your benefits are taxable. Quick example. Let's say this couple has $50,000 a year in benefits, no other taxable income, and the distribution they took from their IRAs was $30,000. Now, $15,000 of that $50,000 of their Social Security benefits will be included in their taxable income. Had they taken a QCD instead and had checks made out directly from the IRA to church, none of their Social Security benefits would have been taxed. So that's problem number one. Problem number two. This has to do with a lady named Irma. Now, Irma sounds like a sweet, kind lady. However, Irma can be a harsh mistress if you're not careful. Irma stands for Income-Related Monthly Adjustment Amount. Essentially, these are Medicare surcharges on your Part B and Part D premiums if your income is above a certain amount. And guess which income is used in the calculation for whether or not you'll be paying IRMA surcharges? That's right, your AGI. Technically, your AGI from 2 years prior, but that's a discussion for another day. In problem number three, I've saved the best for last, or maybe the worst, I don't know. Every year, when you're filing for your taxes, you add up your itemized deductions to see if it will amount to something greater than the standard deduction. But you only get to pick one. This year, 2024, the standard deduction for married filing jointly is $29,200. So let's look back to our example from earlier. A couple who takes a $30,000 distribution to give as contribution. Well, that would just exceed the standard deduction. so they can deduct the full $30,000. Whether they decide to deduct it this year or in the future, depending on if the deduction is less than 60% of their AGI. So, by taking an ordinary distribution and then giving it away later, you forfeit the tax benefit of the standard deduction. Instead, you could have had the checks paid out from your IRA to church as a QCD that would have been deductible from your AGI. And you also could use the standard deduction. So what would have been a choice between itemized deductions and standard deduction, and only getting to pick whichever one was larger, now you have the opportunity to essentially say, you know what? I'll take both, allowing you to avoid overpaying in taxes. Alright, so again, why not take a regular distribution out of your IRA and then put part of that money into the collection plate? 1. Because it can make more of your Social Security benefits taxable. 2. Because it can increase your Medicare premiums for Part B and Part D. And 3. Because it forfeits the tax benefit of the standard deduction, meaning you're probably paying more taxes than you should be. So what should we do instead? Tell your custodian, whether that's Schwab, Vanguard, wherever your IRA lives, that you want to take a QCD and have a check sent to you that's made out to church. I know that depending on your custodian, you can even have checks requested as frequently as weekly, so you can always have something to still put in the plate, or however your congregation takes a collection. Okay, those are certainly not the only benefits to making a QCD from your IRA, but if you're already making contributions to the church, those are the benefits that I could think of today. So as we wrap up, remember, because money is most useful in the hands of eternity-focused Christians, then generally, our church contribution ought to look differently past age 70 when it comes to which account is sourcing those funds. And if you're much younger than that, and are still contributing towards retirement, this is one of the many reasons why it is likely not optimal to have all your savings to be tax-free Roth dollars that you've already paid taxes on. So again, after you've turned 70, in general, you'll want to be sure to make church contributions directly out of your traditional IRAs. Thanks for listening. Remember, while I am a financial planner, I'm probably not your financial planner. So the information in this podcast should not be taken as personal investment, legal, or tax advice specific to you and your situation, because I don't know what that situation is. So be sure to consult with somebody who does before you make life-altering changes based off of something that you heard on a podcast online. I'll see you next time.